Hello friends, this is Sushil. Welcome to my new presentation on asset allocation. Planting money for growth is not easy. We need to understand different assets and its dynamics before deploying money on particular asset. So far, majority of us may not be deploying fund consciously. Many of us usually get influenced by the surrounding. Asset portfolio varies for person to person based on age, risk appetite, and financial position. For example, if you are young and on job, you can deploy 50% of your allocation in equity and rest can be allocated in other assets. But once you are retired, you can't have the same allocation. Okay, so let us try to understand asset allocation in detail in coming slides. Let us move to the next slide. If we study the best investors and their philosophy, we can get a lot of clues and principles that one should follow in asset allocation. The common principles for the best investors are avoiding losses. They have one more important principle. They don't follow conventional theory of big risk and reward. Their principle is to minimize risk and maximize reward, which they call it as asymmetric risk reward. So, asset allocation is all about diversification of assets in such a way that it reduces your risk and maximize reward. It is just like an orchestra. So, don't just listen to one instrument, listen to the entire orchestra. So, how our investment perform together, how well they are diversified, will ultimately determine how good asset allocators we are. If we look back to history, when humans lived as hunter gatherers, we had no power. We were at the mercy of nature. We could be destroyed by nature or predators. We ventured into wild to hunt or scavenge for food. But gradually, over many years, we developed a unique skill. We learned to recognize and utilize patterns. Most important was the patterns of the seasons, and we took the advantage of it for agriculture. This capability moved human civilization from scarcity to abundance. So, recognizing pattern and understanding its impact on assets is very important in asset allocation, and we need to pay close attention to recognize these patterns. So, here we will discuss one example. So, in this slide, you know, it shows gold performance during uncertainty. So, gold as an asset, the pattern is whenever there is uncertainty, gold performs. So, in 2008 to 2011, yeah, and during this COVID breakout, just see how the gold performed. It's continuously moving up. And exactly other asset like equity, it underperforms during the uncertainty. Now, what is coming out from here is a diversified allocation in gold and equity will help us in managing our assets better than completely allocating everything in equity. We will move to the next slide to understand the seasons in the financial world. So there are basically four seasons in financial world, and it can impact the price of assets. So these seasons are higher than expected economic growth, lower than expected economic growth, higher than expected inflation, and lower than expected inflation. Now, we can't predict these seasons. and its sequence as well. We don't know when it will come and what sequence it is going to follow. But we have to allocate fund in asset in such a way that it can defend all these seasons. So we know the potential seasons. Now we need to understand assets and its performance in each of these environment to finally create all season portfolio. And I think that is the final objective of this presentation. In addition to knowing the season, there are some more important points we need to consider to improve the efficiency of asset allocations. So that is what we are going to discuss in the next slide. So the major points are tax efficiency. So whenever we are allocating fund into any asset, we have to look for asset efficiency. For example, you know, uh, let's say deploying fund in FD, or else let's say going for physical gold. These are not tax efficient. So instead of that, we can think about gold sovereign bond. you know um, so let's say even though there is a locking period of 8 years, there is no capital gain tax on gold sovereign bond. So it is highly tax efficient, compared to um, other options like FD and physical gold. Second point is, you know whatever allocations we are doing, that should eventually beat the inflation. So if you look at FD, which is inefficient, yeah, it's very difficult for FD to beat the inflation in the long run. So but whereas equity, though it is volatile, in long run it beats inflation. And equity, when I am saying, one point I just want to mention here, I am not emphasizing equity for trading. It is purely long term investment. Okay, high quality stock, if it is invested for long term, that will surely beat inflation. Or else just think about index always beat inflation. So the next point is asymmetric risk reward, which we have discussed in our first or second slide. With minimum risk, we have to expect maximum reward. So that should be our allocation philosophy. Now, how we can do that? We can only do it by, purchasing things at a discounted price. So let it be a property or a stock that has to be purchased at discounted price. Now imagine about the current situation, when market went down by 35-40 percentage recently. Purchasing equity, or even purchasing the index fund, was a good option. So now market moved up and it gained almost 20-25 percentage. So if you look at, always, there are opportunity comes in. The only criteria is how much attention we are paying to these kind of opportunity, and we have to meticulously convert these opportunities. That is how we can make our asset allocation more efficient. So the next point is stages of life. So we have to be clear with where we are. A person who is young, he is in the accumulation phase. But a person who is planning for retirement, or a retired person, should think about liquidity and security. So it's a, if you consider life, uh, so the asset accumulation strategy is moving from offensive to defensive. That is how it is going to happen. So it can't be same for everyone. So it will keep on varying based on different stages of life, and accordingly we have to plan asset allocation. So moving to the next slide. So all season portfolio is all about diversification. Okay, that is what we can understand from all our previous slides. So we have to understand one fact. We human has a unique tendency. We usually bet on things which worked for us in past, and it gets amplified with more and more success. But when the season changes, our bets may not be relevant. I personally, know many people who bet heavily on real estate over the last 10 years, and now they are struggling to resell their property. That's why we have to diversify our assets. Okay, so diversification is required for two reasons. One is to defend when things are not performing, or else when things are underperforming. Okay, and to take the advantage of growth. So in the right hand side of the presentation, I have shown four assets in four quadrants. So these are equity, real estate, gold, and bonds. Now, gold and bonds are good defenders. So whenever economy is underperforming, or whenever there is deflation, or whenever there is uncertainty, uh, these assets really take care of the situation. Equity and real estate, they are best bet to take the advantage of growth, as well as equity always performs whenever inflation is high. Now, these assets should be deployed based on um, your age, risk appetite, liquidity requirement, as well as you know what kind of a security you are looking for. For example, a person who is retired, or else who is going to retire, he should have more and more liquidity, as well as he will be more focused on security. Now, it may not be the condition for someone who is on the job. So all seasons portfolio management is a continuous process. We have to keep on optimizing it continuously based on where we are and where we are positioned. So let us conclude important points from the presentation. So one is understand the important season in the financial world. Look for asymmetric risk reward, so that we can get maximum benefit in our asset allocation. Diversify asset allocation in tax efficient assets. Keep on continuously optimizing asset based on stages of life. So these are the important points which are coming out of the presentation. uh, Thanks for watching my presentation. Wish you good luck and prosperity. Create your own all season portfolio based on where you are. I will be giving a separate presentation on various assets and its dynamics. So thanks a lot.